Hey there guys, this is Houston Trong from thetradingedge.org. Just recording this quick video to share with you a trade that we put on earlier today. This trade is spotlighting CRM. It's a stock that we've been highlighting in our past couple of videos. So we first brought it to your guys' attention on the weekly outlook video and brought it up again yesterday as a potential one to short. And today we got the entry. So I want to share with you and give you a highlight on what that entry looks like because it's one of my favorite trades. You might get something out of it. So right now CRM is down, let's see, about 2.16%. And so let's share with you how this thing broke down. So we always begin on the wider time frame because that really informs our lower time frame decisions. On the widest time frame, the monthly, we have it as a red month. Now, this weekly pattern is what brought it on our weekly review process in the first place. So as you remember from the weekly outlook video, we had an inside bar that broke to the upside. Now, the issue was if it broke below the low of this previous week's low, then we have that reversal pattern playing out. Because anyone who gets long here and is looking for a continuation to the upside, once it breaks below the low of this breakout bar, then there's potential that it goes back through the range again. So these pivots then become in play. So the level that we were waiting for was 160.88. Now yesterday in the daily chart, we were looking at that level, right? Now yesterday it ended right at 160.88, pretty much right around there. And so today was really going to be the day to watch once again to see if that level held or it broke. And so this morning, it actually gapped up slightly in the morning before coming back through the range again. And so that was the ideal scenario because that effectively traps even more traders. Anyone who wants to get long here think it's going to be a pullback and they're playing this kind of pullback and pullback play and hoping that it goes back to highs again. They're getting trapped once it comes back through the range. Now anyone who's long here or long anywhere through here is now at risk of getting stopped out. So that's the ideal scenario there. And so let's see how we got into the trade. So looking at the 4-hour chart, and this is what we pointed out yesterday, was that it ended the day as an inside bar. So once again, it goes inside bar and up this morning when it gapped up, went a little higher, and then it came back through the range. The ideal scenario for a short because again, you're luring in more buyers, these buyers here who may have bought up here around here, and now once it comes back through here, they're going to have to cover, right? They're going to have to cover their longs, and that'll add to the selling pressure. So once it breaks below 160.88, we have our bias, right? So that's gonna take advantage of that weekly time frame chart that's playing out. Once it breaks below the purple line, that's actually the weekly open. So once it breaks below the weekly open, now you have a trade that has full time frame alignment to the downside because you're going to have a red month, a red week once below the purple line, and it's going to be obviously a red day because it opens here, and anytime it trades below the open, it's going to be a red day. And so how do we see that playing out? Well, let's take a look at the an intraday chart now to see where you could have gotten in. So on the hourly chart, here's a very simple entry. If you simply want to sit on the hourly charts, then you had this scenario here. We had the open here that created that wide range bar, an outside bar that set up this sequence: inside, outside, inside again. This final inside bar happens right below the 160.88 level that we identified, and it's sitting right on the weekly open. So you know here, if and when it breaks to the downside, it's going to put everything into full time frame alignment to the downside. And that's what we were looking for. And so you could have taken that right there, right? So you could have taken that right there, put your stop at the top of that inside bar, and now you'd be up 2R. So very simple trade there. If you want more bang for your buck, you can zoom in on a lower time frame chart. So as an example, look at some like the 15-minute chart. There's a number of sequences you could have taken advantage of. So here on the 15, it opens right here, wide range bar, outside bar, followed by an inside bar. So here the buyers try to take it inside bar and up, right? So you have the inside bar and up, and it fails, right? So this is an inside bar reversal. It looks just like this on the weekly. Same thing here. So you could have got short right there and put your stop right there. And that, never came back against you. So it came back to your entry, but never got pretty much further than that. And, it's a winning trade from there forward. So exact same entry. And again, the other confluence is that it, once it broke above here, you're above the Bollinger Bands. And if it doesn't stay above the Bollinger Bands, then you get that possibility that it's going to come back through the other side of the range, which is what it did. If you want to add to the trade, here's another scenario right here, right? Let's say you missed this one. You missed the first entry. You had up until 11:15, 11:30 to get into the trade. Inside bar, outside bar, inside sequence. We've talked about that sequence a lot. There it is again. Inside, outside, inside. Break below there. And this chart here shows a bit of a gap here, but on my charts on using IQ feed, we don't have that, and through my broker, we don't have that gap. So you could have had a better chance of getting filled here. Maybe, maybe not. It depends on CRM is spready, so it depends on your broker. Maybe you would have gone filled, maybe you would not have. Depends how fast you were. And there's a situation again where you had a nice trade to put on there. Very tight stop. That would have worked very well. Once it breaks below the weekly open, now you have full time from alignment to the downside, right? Month is red, week is red, day is red. So then you can take this one too, because this is a momentum trade. It means it has to keep working right away because it's not a pullback scenario. And so here, it just has to keep working. But because you do have that full time from alignment, you can take that trade and give it a little more, and have more confidence in it because you have that alignment around timeframes. That thing keeps going as well. So, that's an example of a really good trade, taking advantage of the bigger timeframes and then using the lower timeframes for execution. Hope that helps. Have a good rest of your trading week. Happy trading.